Imagine owning one of the most valuable luxury brands on earth. A company that generates billions of dollars every year. A brand recognized in almost every country. Yet not a single person can buy its stock. For more than 118 years, Rolex has refused to go public. No IPO. No Wall Street. No public shareholders. Why would one of the world's most successful companies reject billions of dollars from investors? The answer reveals one of the smartest business strategies ever created. Every year, hundreds of companies dream of going public. An IPO brings massive amounts of capital, worldwide attention, and often turns founders into billionaires overnight. For most businesses, going public is considered the ultimate milestone. But Rolex never followed that path. Instead of chasing Wall Street, it chose complete independence. And that single decision became one of the biggest reasons the brand is still considered the gold standard of luxury watches today. To understand why, we have to go back to the beginning. Rolex was founded in 1905 by Hans Wilsdorf. From the very beginning, Wilsdorf wasn't trying to build just another watch company. He wanted to create the most trusted wristwatch in the world. At a time when pocket watches dominated the market and wristwatches were seen as unreliable, this seemed almost impossible. So instead of competing on price, Rolex competed on precision. The company invested heavily in engineering, quality control, and innovation. It introduced the first waterproof wristwatch, the Oyster. Later came the perpetual self-winding movement. Over the decades, Rolex became synonymous with reliability. Explorers wore Rolex while climbing Mount Everest. Divers trusted Rolex underwater. Pilots relied on Rolex during long-distance flights. Every achievement strengthened the brand's reputation. But something even more unusual was happening behind the scenes. Unlike almost every major luxury company today, Rolex wasn't preparing for an IPO. It wasn't looking for venture capital. It wasn't searching for outside investors. Instead, the company was quietly building a structure that would protect it forever. When Hans Wilsdorf grew older, he faced an important question. Who would own Rolex after he was gone? He had no children. Many founders in that situation would sell the company. Others would take it public. Wilsdorf chose neither. Instead, ownership of Rolex was transferred to the Hans Wilsdorf Foundation. That decision permanently changed the future of the company. Today, the foundation remains the owner of Rolex. This means there are no public shareholders demanding higher profits every 3 months. No activist investors pushing for cost-cutting. No hedge funds demanding faster growth. Instead, Rolex can focus on something much more valuable. Long-term thinking. Most public companies live quarter to quarter. Every 3 months they report earnings. If profits disappoint investors, the stock price falls. Executives face enormous pressure to increase revenue immediately. Sometimes that pressure leads companies to cut quality, reduce research spending, or prioritize short-term gains over long-term success. Rolex doesn't have that problem. It answers to no stock market. It doesn't need to impress Wall Street. If developing a better movement takes 5 years, Rolex waits. If building a new manufacturing facility takes 10 years, Rolex invests anyway. Because the company's goal isn't maximizing next quarter's earnings. Its goal is protecting the brand for the next 100 years. Another reason Rolex never needed an IPO is simple. It already generates enormous amounts of cash. Luxury watches carry exceptionally high margins. Demand for Rolex consistently exceeds supply. Year after year, customers around the world continue lining up to buy its watches. That means Rolex doesn't need outside investors to finance growth. The business largely funds itself. Instead of raising money through the stock market, it reinvests its own profits into research, manufacturing, quality control, and new facilities. This creates a powerful cycle. Higher quality strengthens the brand. A stronger brand increases demand. Higher demand generates more cash. That cash funds even better products. Few companies manage to sustain this cycle for decades. Rolex has done it for generations. Perhaps the most misunderstood part of Rolex's strategy is scarcity. Many people assume Rolex simply can't make enough watches. The reality is much more strategic. Rolex deliberately protects exclusivity. While it produces a significant number of watches each year, demand remains much higher than supply. As a result, waiting lists for popular models can stretch for months or even years. This scarcity creates something money alone cannot buy. Desirability. People naturally value things that are difficult to obtain. Collectors compete for rare models. Secondary market prices often rise above retail. Media attention increases. The brand becomes even more prestigious. A publicly traded company might face enormous pressure to dramatically increase production and maximize short-term sales. Rolex doesn't have to. It understands that in the luxury business, selling fewer products can sometimes create greater long-term value than selling more. Exclusivity is not a side effect. It is part of the product itself. Another remarkable advantage of staying private is secrecy. Public companies must constantly disclose financial results, executive compensation, growth projections, and countless operational details. Rolex reveals very little. No quarterly earnings presentations. No investor conference calls. No public guidance. Very few official revenue numbers. That secrecy has become part of the brand's identity. Analysts estimate its financial performance. Journalists speculate about production numbers. Collectors debate future models. Every unanswered question makes Rolex even more fascinating. Luxury is built on emotion as much as engineering. Mystery strengthens desire. Rolex understands that better than almost anyone. But perhaps the greatest benefit of remaining private is freedom. Freedom to ignore temporary market trends. Freedom to reject unnecessary expansion. Freedom to invest patiently. Freedom to protect quality above all else. Many famous brands eventually sacrifice part of their identity in pursuit of faster growth. Rolex rarely faces that temptation. Instead, every decision is measured against one question. Will this make the brand stronger decades from now? Not next quarter. Not next year. Decades. That mindset is extraordinarily rare in modern business. And it may be the company's greatest competitive advantage. Today, Rolex is far more than a watch manufacturer. It represents success, achievement, craftsmanship, status, and timeless value. Ironically, one of the biggest reasons Rolex became so valuable is because it refused to follow the path that almost every other successful company takes. No IPO. No public shareholders. No Wall Street pressure. Just patience, discipline, quality, and long-term thinking. In a business world obsessed with rapid growth and quarterly profits, Rolex proved that sometimes the smartest strategy is knowing exactly what not to do. And perhaps that's the real lesson behind one of the world's most successful companies. Sometimes, staying private is the most valuable investment a business can ever make.